Hi, good evening, ladies and gentlemen. This is Manoj Atri, your host for tonight. I am a real estate agent with VMAX Hallmark. So, if you can hear me, give me yes or any kind of indication that you can hear me properly. And let me get a hi from our uh, mortgage broker. And once we get some info that everyone can hear us, we will be more than happy to get the whole ball rolling. Go ahead. Hi, Faisal. How are you, sir?
Hello, sir. I'm well. Hello to the audience. If you can hear us both, if
Yeah.
you can hear one of us, please let us know in the chat.
And yes, chat is also working. And at this moment, the only thing I can tell you here is we are live on Facebook, YouTube, and Twitter. And I'm just waiting for someone to text me and then we'll get started. So, Faisal, how are you and what's going on in the market?
I am good.
Okay,
Early spring.
okay,
What's going on in the market? Um, it's an early spring market.
okay,
Um, what I mean by that is we've seen the jump in the rates, slight jump.
okay,
Um, just fixed rate, not the variable. Um, and with that, I've seen an increase in inquiries for pre-approvals. Um, there are some increase in the credit repair clients,
hmm
and yeah, it's an early spring market, so it's a very early stage of client and my um, you know coming together.
okay. We have the Mr. Lalit who has joined us today. He has updated us that he can hear both of us very well. So
Fantastic.
we are
Thank you,
good to go.
Lalit.
Wonderful, very good to go. And the topic that we are going to cover, Faisal, is requires all your expertise today. So you have to be geared up completely. Okay, so let me take you to that the agenda of the day, and
Mhm.
then I'll get back to you in a moment's time.
Awesome.
Okay, wonderful. So, ladies and gentlemen, let's go for thank you again for joining, and I'll start with my real estate monologue. So the monologue is it's a very very different market, and it has gone more crazier by the day, and it does not seems to be like subsiding, but hopefully the government may have to intervene. I've been emailing regular articles regarding the same, and we expect something may happen in the coming months. And we hope for the better that it cools down a bit because it is going so crazy that it is beyond comprehension at the moment. Okay, so now let's start. The main thing that we will be picking it up today would be an article review. And the main thing about that one would be what should landlords look for in credit checks? And who can answer best? We have the mortgage expert here who is an expert in doing credit repairs. And most of the time, when we get an application or we get a someone query, we immediately send it over to mortgage brokers to review that can you tell us whether this tenant is good enough for us to get started or not. And so that is where, and when he's going to answer us those particular things, if you are a tenant, you can also work in this particular format to make sure that you take care of those things before you even start going and applying for being a renter. Now, next we will cover our main webinar topic, rent to own homes. Is it a risk for tenant oblique buyer? It is a major risk, but we will walk you through. And if you can have a watertight contract, you're good to go, sir. And we will have live interview with our mortgage expert throughout the period of time. And we will try to get as many questions answered as possible. And we will take it from there. So let's head over back to our expert and see what he would like to add to it. Faisal sir, what do you have to say?
I have two, three things to say. The
Mhm,
first one is what should landlords look for in a credit checks?
mhm.
Uh, I'll I'll let the audience know there's a whole lot of information coming your way. Grab a paper and pen.
Okay, gear them up right away, huh? Okay,
Number
go ahead.
one. Number
Mhm.
two, webinar topic. That's a very good topic because rent to own homes when clients goes in it, it's a risk and reward. You really have to look at what the risk is and what the reward is, and is it worth taking the risk. And in that whole introduction, I heard the term watertight contract.
Yes,
That is an interesting term. I may have to use that more often.
yeah, that is where our entire thing has gone. And the best part is we have first goof up done. Okay, but I'll try to see if I can get myself out of it as early as possible, and we will see if I can get going on that particular one. Maybe I don't know what I must have clicked. And I was thinking, like, how things can go smoothly. They don't go smoothly. So that is where we are. But I will keep on addressing it. And let me see if I can get this sorted out. And once if I'm able to sort this out, then I will be in control. Okay, let's see. Go ahead, Faisal. If you need to add anything in the meantime, I will.
Well, as you are overcoming that challenge, I was just thinking from the day that I have met you, challenge is what we thrive in. So every thing we pick up has its own challenges.
Yes, it is. It is. It is no doubt about it. Like the main thing here is like you hit on one thing and it just goes out of your way. I mean, all the windows were running fine, and then I must have clicked on a window. It closed down everything. And now, because there are so many things opened up on the computer,
Mhm.
it takes quite a while to just even get the page rolling properly.
It does. It
Anyway,
does.
okay, so let's see if I can close a couple of windows. Now, what are in the meantime? What are the interest rates going on? First?
So, depending on what product you are asking for,
Mhm.
um, 2.14 5-year fixed is going on for 20% down uninsured,
Okay, which is a
30 years term.
quite a good one.
That's it's the best one in the market so far I've seen,
Okay,
um, and it applies. So that's another good thing.
okay.
Um,
Now the
Ask me that question. I'm pulling up rates from today.
oh, awesome. That'll be great. Now the main thing here is there was a topic that I was reading today, which says
Mhm,
regarding should someone be
mhm.
taking a variable rate or a fixed rate?
So I don't believe. Um, so I'm inclined towards variable myself,
Okay,
and I have my own bias, I should say,
okay,
um, because I've the first home that I purchased, I did the first time I took the mortgage, I took fixed rate,
okay.
and the penalty was so big that I said
It
I'm
doesn't
never
make
taking.
it doesn't make sense. Huh?
Yeah, I promised myself that I'm not going to take fixed rate anymore.
Okay,
And from there on, I've been stuck with variable. And in last 11 years, I have only saved money
yes, because
doing variable.
okay. Have you ever? But the main thing here is that the fixed interest rate these days is the lower even than variable. Don't you think so?
Um, they're not. No,
No. Okay.
no, they're not.
Okay. Again, in no matter fact, you would still prefer to remain with
Variable.
variable. Okay. Why would if you can elaborate on it, because this particular thing is completely frozen. So if you can keep on elaborating, I'll
Yeah.
still try to
So
see.
the rates, the lowest rate we have is 1.19
Okay.
at this moment,
Hmm.
and it's a fantastic rate variable.
Okay.
It is a premium five. It's a high ratio, late payments and such. As long as last 6 months
Hmm.
payments are done on time, you qualify for that rate.
Awesome. Okay. Now, there is, okay, let's see. Google has given us another challenge. So now, what would you say about? Uh, there was an article long time ago
Mhm.
that no matter, I mean, it was done by one of the leading papers,
Mhm.
and it told us no matter what you do, the interest rates fixed is never that great. I mean, the variable rate is the one that one should be working on, and they had worked out something for more than 11 years that the variable was always the perfect one.
So and the story does hold credit,
Okay.
because when I started doing mortgages in the first 2 years, I used to know a fellow who
Hmm.
retired,
Hmm.
and he was in his early 70s at the time.
Okay.
So I would assume he's close to 80 now.
Hmm.
And he had seen those days when the interest rates were 12, 13, 14%.
Okay.
And he said, one thing he said stuck with me is, Faisal, for the last 50 years,
Hmm.
if you look at fixed rate and if you look at variable rate, you
Okay.
draw a chart, variable has always been lower than fixed.
Okay.
Always. Now, that's one.
Hmm.
Number two is, and I don't know how true this is, but another gentleman said that the fixed rate is determined by a person called actuary.
Okay.
It's a designation
Hmm.
that they work for insurance companies and banks and such, and then they forecast the rates.
Okay.
And the forecast is done based on what the prime forecast is, like Bank of Canada Prime.
Okay.
And the person said that, do you think bank would do something that will cause them loss?
Hmm.
And I said, probably not.
Hmm.
And they said the actuaries get paid very high salary, and that salary comes out of the profit that the bank makes between variable and fixed rate mortgages.
Okay.
So, and I don't know how much that theory is true,
Hmm.
but there is something to think about.
Okay. Uh, I am still coping, and in case if if you can you see my screen? Because
I can.
yeah,
It's
so
Google.
yeah, Google is absolutely. I have no idea what is taking Google, so it's not opening up that page. Anyway, if you can continue, anything else you would like to add to that, and then I can
Well,
take it to that. As soon as this page is there, we will start the topic that we can cover.
so quick synopsis on the rate: 1.39 5-year fixed
Okay.
is lowest,
Hmm.
um, and fixed Another, oh, actually, rate 1.84.
Wow. Okay. So that's
So,
for a variable, you said, or a fixed.
no, fixed rate.
Okay. And so that is where we are. Okay. If this one is taking time, then I might as well. In the meantime, I'll start with the uh, rent to own. And as soon as I get back that particular page, I might as well, I will jump into it. But at this moment, Google seems to be completely frozen. It is, if you can see, let's give it one more last try. And if I can get that, yeah, I have something in here. Perfect. Wow. Can you see this? What a headache one goes through.
Yeah,
Okay, let's see here. Let me now see if I can get Google. Yeah, I have it here. So
beautiful.
Faisal, I have it. And let's go through before anything else happens.
Yeah.
Okay, let me take it to this particular one. And ladies and gentlemen, let's go through this particular topic, this article, and see till the time Google is helping us. This article is by Transunion, Faisal.
Hmm.
So it is a very very interesting one that we will go into, and it is done by Smart Move team, and it
Hmm.
was done on the 26th of February this year.
Hmm.
And so TransUnion, you can guide us more. What exactly does TransUnion does? It's like Equifax TransUnion. So it's a basically a credit check companies. That what exactly does it transfer?
So TransUnion is very much similar to Equifax.
Okay.
Um, I'll quickly give you. Do you want me to give you differences, or do you want me to just talk about TransUnion in general?
Just so that everyone has a bit of an idea
Uh,
exactly what TransUnion is, because Equifax everyone has, even TransUnion, many people know about
so
TransUnion.
TransUnion is not as widely used
Okay.
credit reporting agency. Equifax is used predominantly,
Okay.
and TransUnion is used in certain sectors a lot more than others. For
Hmm.
example, um, car sales industry, car loans. TransUnion is used predominantly.
Okay.
But yeah, TransUnion is very similar to Equifax, different reporting system. Um, there's major differences in both, but if and therefore the score is never the same on both credit bureaus,
Hmm.
but they use similar principles.
Okay. And for more mortgage industry, most of the time it's Equifax, is that right?
Exactly. However,
Hmm.
when a mortgage is going is 5, 10, 15% down,
Hmm.
high ratio, the insurer checks both TransUnion and Equifax.
Okay. Just to make sure. Okay.
Yes.
That's the bit of a start for that one. Let's go there and see exactly. Faisal, the topic is what should landlords look for in a credit check? So, see, most of the time we are not able to understand if someone sends a credit report and things like that. We're not uh, apt to exactly walk the clients like, okay, these things are good, these things are bad, and you are the expert on that particular one. So we are going to take all your expertise on this one. As an independent landlord, the last thing you want to deal with is a tenant that neglects to pay rent on time. that's that's easier said than done. Considering that the average cost of eviction is 3,500 and can reach up to $10,000, looks like more like a $10,000. Uh,
Yeah.
that is what I would say. Screening your prospective tenants with a complete background check is incredibly important. We know that. And credit check is an important component. Absolutely. It is one of the biggest component, I would say. So spot plenty of credit red flags. Now, Faisal, if a tenant has a history of paying bills on time, So walk me through. I mean, from the uh, credit report, can you see that the tenant has a history of paying bills on time?
Yes.
Okay. If he has a significant amount of debt, can you check that also? Like if he has a significant amount of debt,
Yes.
really?
Yes.
So, okay, that means like all the ones that are there, the which he hasn't paid or are outstanding, and on that basis you can calculate the amount of it.
Absolutely.
If your tenant is likely to pay rent each month, how can you figure that out? If he's paying late, if he's paying early, how can you figure that out?
So I'll tell you, and I'll answer this question a little bit differently.
Sure.
You know how anytime there is a rental inquiry and you have a client that you're, representing on the rental side or so on,
Hmm.
and you send me credit report.
Hmm.
The first thing I look at is what the score is
Hmm.
and what the payments have been looking like, at least for last 2 to 3 years.
Okay.
Because life happens.
Yes.
Okay, there's credit repair scenarios come in with, you know mm, mm, I'm stuck with this word, divorce,
Okay.
bad health,
Okay.
loss of job,
Hmm.
bankruptcy in business, whatever
Hmm.
scenario is.
Hmm.
So life happens, but for last 2 years, have they kept up the payments? That's one thing I look for.
Okay.
Then when you send me a credit report, I take that report and I import the information into my software where I can plug in the client's income and see what the ratios are, income to expense ratio.
Hmm.
And that gives me an idea as to if this client is going to have a hard time paying the rent.
Okay. My question is, so on the basis of this particular article, is
Mhm.
that the landlord is trying to check or just check the credit report.
Mhm.
From there, can we get, is he likely to pay rent each month? Can you figure that out?
So, if someone has paid their credit card, line of credit, auto loan, student loan on time,
Okay.
the chances of that person paying the rent on time are quite significantly high.
Okay. So basically, you are deriving it from the fact that if he has a car loan or if he has any other kind of a loan, and
Mhm.
there is a history of that he's paying within the 30 days time frame.
Yes,
Uh, uh,
and
Go
and
ahead.
Canadians don't have a habit of paying it late because they just feel like it.
Okay.
They only anytime client falls behind, there's a reason for it.
Hmm.
So as long as all the bills are paid on time, most like I would expect that tenant to pay the rent on time.
Okay. Excuse me. Let's go to the next one, which it says, why do I need to run a credit check on a prospective tenant? Is an part of the applicant's background, but the basic screening may give you a fundamental understanding. So the question is, why is a credit check important to run on a credit? I mean, like, can we, let's say, suppose someone comes in over and says, I don't have a credit, I don't have, I am very new, I don't have a credit. How do you address that?
So that answer, and I accept that.
Hmm.
If someone is new in the country and don't have a credit, which is fine, we can work alternative ways.
Okay.
But if someone has been in the country for more than 2 years and don't have a credit, that's a red flag.
Oh, so let's just suppose they never took a credit card or something. They were just working on cash or any other way. They will still have a credit.
So cell phone goes on credit card. On sorry, cell phone goes on credit report.
Oh, interesting. Your cell
The
phone
first
always?
the first thing you need
Is
in
a
the
phone.
country is
Yes,
a
it's a
phone.
phone. Yes. Okay, what if they just have a landline?
That also goes on your credit report.
Oh, okay.
Bell Canada is on credit report.
Bell Canada is there. Okay, and
Yeah,
Rogers and everyone else.
yeah.
Like,
Bell Canada, Rogers, TELUS, Virgin, everyone.
okay, so all these telephone companies, they are on credit. So you will get some idea from them.
Yes.
Uh, So why do okay? Now the question comes: why do I need to run a credit check on prospective tenants? Why do the landlord needs to run that?
So there's many things why you want to run a credit check. One is, first of all, if you are a landlord and you're renting a place, you most likely have more than one application.
Okay.
And if you have more than one application, then you want to make sure that you pick the best of the best.
Mhm.
And the only way to determine who is a better candidate is to have credit reports for both.
Okay. So basically, like you have a rental application, you have the references, you have the pay stubs, and if is that allowed, you
Yes.
can. Okay.
You
So
can create an entire package.
you can create an entire package. Okay. So credit check is one of those criteria.
See, as a landlord, and I've rented for many years.
Sure.
I used to work without credit for some time,
Mhm.
and it did get me in trouble.
You said you did check the credit and you
I,
still got
I
it.
No, so I used to work without credit check
Oh, interesting. Okay.
for first 3 years or so,
Hmm.
and then I stopped doing that.
Okay.
And now I check credit. And if I don't check credit, I get a full application with full disclosure of debts.
Okay.
And I ask why you not have a credit, and I check the credit either way. But if they don't have good credit, then I do more due diligence to
Hmm.
work with.
Hmm.
But a credit report gives you a very good idea of the financial health of the tenant.
Okay. I'll share something else. When I was going through this article, the
Mhm.
moment I checked it out, I said,
Mhm.
Faisal is a landlord. Faisal knows the credit repair.
Mhm.
He does all these credit checks and everything.
Mhm.
Perfect article to be reviewed.
Uh,
So,
I'm glad I made it, because this morning, with the weather change, I've had headache.
I know
And
every time
I
the weather is there is like a rain coming, the pressure is different. I
Yes.
literally like get a headache there. Anyway,
Yeah.
let's get back to this particular one before we become headaches to others. Okay. According to a Smart Move survey, 84% of landlords cited payment problems as their concerns. 100%. I mean, I would say 84% is a very good number to work with. Yes. Credit reports can provide you with insight into a tenant's debt history and any significant credit mistakes, and if they are likely to pay rent each month and can afford to live in your rental property. How will they tell you that they can afford this particular property? How do you have the income format in there?
So uh, I'll go back to my original part that I was saying.
Okay,
When you send me a credit report, I import into the software and I run the numbers and I ask you verbally what their income is.
okay,
I don't ask for document, but I ask verbally.
okay,
So when I input the income and I input the debts, the system tells me income to expense ratio.
okay,
And that amount, along with the debt they have balances, it gives me a very good idea as to, is this tenant able to pay this amount of rent on a monthly basis consistently for the next 12 months term.
okay. So you are getting a good idea from there.
Yes.
Okay, makes sense. Now let's go to the next part of this article, which is what it is saying. What do landlords typically look for in a credit check? Okay, low credit score. See, like try to visualize. They have a low credit score as one of the reasons. Otherwise, if they had a good credit score, they may be even looking at buying a property.
So most landlords look at that,
Okay,
and it is a catch 22. Did the chicken come first or the hen?
okay,
That's the story. If you have low credit score, you can't rent. Because you have low credit score, you're renting,
yeah,
right? so
yes,
so there's really no way to get out of it
okay,
unless you boost your score.
hmm,
And there's several things you can do on your own to boost your score. But yeah, landlords look for low credit score. Let me just say this. I have one of the unit that is up for rent May 1st,
okay,
and I haven't even advertised yet. But when I do advertise,
okay,
let's say two applications come in. One is has, I don't know, 550 credit score, the other one is 650.
okay.
I am naturally inclined towards 650 now,
How? Why?
because that's one of the deciding factor,
Okay,
higher credit score.
higher credit score. Okay,
Now, me being a landlord also in finance and mortgage brokering and credit repair, of course I look at it from a much different angle than any other landlord.
okay.
But when a landlord looks at two application, it's like job application. They're giving you a
An insight on the insight of the.
minute and a half to go through your application.
Okay,
In that time, if you have a low score, you are starting an uphill battle.
okay, okay. If I'm not wrong, there is a minor freeze at our end, but let's see if I can. We can keep on rolling, and it is seems that there is a bit of uh, stopover, but we should be able to get something moving further. Let's see. Okay, yeah, we are like still rolling. Yes, Faisal, we have gone slightly in. Okay, let's head over to the article till the time we can restore Faisal there.
Yeah.
Okay, late payments. Next one is okay. These are like all these 6 points. Let me go through them, and then we'll go because we are picking up all six of them one by one. So low
Mhm.
credit score, late payment, payment gaps, significant debt load, regulatory marks.
De-
Regulatory
de-
mark, is it marks or
derogatory.
derogatory
Derogatory.
marks or remarks? Is it derogatory remarks or just marks?
Just marks.
You have these kinds of marks on the credit?
No, so it does not mean marks as a number, but
Okay.
derogatory. The fact is, it should say derogatory remarks, but like something that says there is a derogatory information.
Okay. Delinquent accounts in rental history. Okay. So let's start with the low credit report. Now, a credit score does not necessarily provide a holistic view of the applicant's financial state or behavior. That is what we are trying to say. Yes, we do not exactly come to know where things are. Okay, go ahead, Faisal. You explain. Let's try
So,
to keep on working on the low credit report score.
so low credit score can be for many different reasons.
Okay,
And if you are on the landlord side, I suggest you dig deeper than just the score.
okay,
What I mean by that is sometimes having, for example, a father signing for a son's home
okay.
as a co-signer will bring their score low. Okay.
Hold on. Too slow. A father signing for a son,
So co-signing, when you
co-signing.
co-sign for
Okay,
someone,
okay.
that drops your score.
Whose score? The son's or the father?
The co-signers.
Father's score is dropped down. Why?
Yes, because they're taking on debt that is not theirs.
How?
They have
Interesting.
their own mortgage to deal with,
Okay.
and now they have another mortgage for their son that
But
they've co-signed.
if I'm not wrong, as per the mortgage doesn't show up on the credit.
It used to not. Now it does.
From when?
2017.
Well, oh, interesting. This is good to
Every
know.
mortgage shows up now.
Every mortgage shows up on the credit report.
Every single one.
So
They all got on the bandwagon.
you remember, if maybe a few years ago, that
Mhm.
means if you had a mortgage and you went to a different bank for a different mortgage, yes, you used to get it. So now, because of that, they did that. Is that the reason?
That is one of the reason.
What could be the other reason?
People are not paying their mortgages on time and it's not reporting. So the other company doesn't know what the real credit score is of that person because the mortgage doesn't show.
Interesting. So there is no hiding anymore, huh? Nothing, huh? Okay,
The hide and seek game is gone.
it's gone. Okay. Now, what is not? Let me ask you in a different way. What is not showing presently? Still not showing on the credit reports?
Rental payments.
Rental payments. That means if you are late, it's not showing,
It's not shown.
and that day will also come when that is going to happen.
It's actually in the process as we speak.
It is
I
it.
read this not long ago that rental payments will be showing on the credit report.
Sooner or later. Okay. Faisal, now let's go through this one and see if I can zoom this particular one. It says
Decline.
resident score is able to score all applicants with at least one account on their credit report. It shows in green 560 to 850.
Mhm.
Low accept is 538 to 559. Conditional on 524 to 537 and decline below 523. What exactly is this meaning? Resident score range.
So someone must have come up with this range. I'm not sure where this range has come in from.
Okay.
However,
Let me
they
zoom it up further. Can you see this range?
yes, I can see it now.
Okay.
However, this does have some sense to it. What I mean by that is 560 to 850,
Mm-hmm.
meaning you have your current payments are kind of on time.
Okay.
You've had some problem in the past.
Okay.
Low accept is you have some problems, but you're still making payments. You're struggling, but you're doing it kind of okay.
Mm-hmm.
Conditional is you really have to look into it as to why the score is low,
Mm-hmm.
because the person may be going through a divorce and has a line of credit joint with their spouse,
Okay.
and the spouse is choosing not to make the payment. Happened in my case.
Okay.
And therefore it drops the credit score for both people.
Okay.
And the decline means that you have problems on your credit score, credit report, and you're choosing not to work on them.
Okay.
That's the way I can translate to the landlords that are listening here, and the tenants that want to be in a good place when they go for a rental.
But Faisal, try to understand. A person is going for a rental because he is in some kind of a situation. How do you address that?
So it's the chicken and hen story.
Okay.
It really has to boil down to the landlord being accepting it.
Okay.
And there are many times clients reach out to me because landlords are not renting. And I have yet to work on something that helps the tenants
Mm-hmm.
to kind of get out of that space.
Okay.
But yeah, that is one of the thing that does hold tenants back.
Okay. Okay, let's keep on rolling because landlords are able to pick a better tenant because resident score can determine risk better than generic scores. What is the score, Fazil? Is it a different kind of a score than the credit score that we see in general?
So they Transunion has something called as credit vision score. I am not exactly sure about this resident score range. Maybe this is the new landlord tenant. How old is this article?
February of 2021.
You know what? I think this is exactly what we're talking about. I think this is um 1 second. I'm just rental payments on credit.
Because resident, I mean, I'm trying to understand, is the resident score range different from the credit score that we are generally seeking from them?
Yeah, so this is not credit score. This
This
is
okay, so
this is
there
a
may
different
be
score.
they may be a rental. When you go to TransUnion,
Hmm.
do you have choices that you need a rental score, credit score, or just a credit score?
Credit score.
So within that credit score, you may have resident score range, is something of that sort.
I see. I've not gone on TransUnion on the client side,
Okay,
but on the broker side, there is no such thing. It's one score.
okay, okay, okay. So let's. So
But
we.
this is interesting. Maybe I should go on the client side and see what that looks like.
I mean, because see, the main thing here is this is explaining something completely different than the scores that we are seeing. Because I have most of the time, lots of people are going into being renters
Hmm.
because their credit score is less than 500. They have no options left there.
I see.
And now, I mean, this is like something we are looking into, but let's see, whatever we are learning. Landlords may increase their chance of avoiding eviction because resident score has been found to predict the likelihood of eviction at a rate of 15% better than other scores. Wow. Landlords can feel more confident and widen their applicant pool because resident score can score more applicants with thin credit files. Okay, so they have something of the sort, and that is what they are trying to uh,
Yeah.
walk us through. Okay, next one is late payments. And we are able to gather that from the application. Is that right?
Yes.
And that is like a absolutely no-brainer. It is, you can completely see it.
Yes.
Okay, so as a landlord, you want tenants who will pay rent on time all the time. But obviously, that's a nice line there. If a tenant has a history of making timely payments, then there is a greater likelihood they'll pay on time when leaving your property. Yes, I just got a call today from one of the prospects, and they said that there was they messed my house. So there was a fire and things like that. They haven't shared that information and blah blah blah. So I mean, yes, it is not easy to rent.
No. No.
Okay. Ultimately, a credit report gives landlords a holistic view of their prospective tenants' financial history and can help you determine if you're going to run into a non-payment issue down the line. Uh, Let me give my 2 cents in. My generally way of handling it is even like, see, first the contract has to be solid. There are people like who may be renting because they are in trouble. But the basic thing here is go through that application thoroughly. Go through the credit report so you can get an idea and ask them, like, okay, what happened here again? People sometimes run into a problem in life. We never expected COVID. Everyone is running into a massive problem here. Our lives have changed from the past 2 years.
Yeah.
We who have never done anything wrong are in a different format now. Okay, so things do change. Second thing is their references. every information that they have written on the application. See how do they speak out and try to figure that particular person out. Second, the contract that you have should be absolutely very, very good. More likely on a watertight format.
Yes.
And the third thing should be have a paralegal or a lawyer on the side. They don't pay you. There has to be no emotion involved. First, on the deadline that whatever deadline is there that they are supposed to pay, they haven't paid. There should be a notice going to them on the next day.
Yes.
That is how you will have to work. And you will have to, if you are wanting to be a better landlord, those are the things. But yes, some of these ideas that you can get from late payments and things like that, that is, they are helpful.
Yes.
Okay, let's go to the next one. Ultimately, a credit report gives landlords, yeah, we have payment gaps. Faisal, walk me through. Shows anywhere from 7 to 10 years of an applicant. Landlords should look for any gaps in payments to loans, credit cards, and finance. Okay, let me ask you a different question. Let's just suppose they had a credit card and they closed it. How long is the credit history? I mean, is it going past 15, 20 years also?
6 years.
So what happens if, they used to goof up 6 years and now they've come back and they will goof up again. How do you know that?
You don't know that?
Mm-hmm.
And that's one of the things to look for is how old the credit cards are. And
Okay.
the credit report tells you when the credit card was opened.
Okay, so what happens if you close a credit card? Does it still keep on showing?
It keeps on showing for 6 years.
For 6 years, it will keep on showing?
6 years from the date of last reporting. So yes, up to 6 years. After 6 years, it drops off.
Oh, okay. So basically, even if you have closed your credit cards, they're still showing up.
Yes.
So you can't goof up that much.
if you're thinking to scam the system, that doesn't exist anymore. There were times when people might have done it,
Okay,
not anymore.
not anymore. Payment gaps. So what exactly are they meaning the payment gaps?
Meaning, they're making payments, but in between they're skipping a payment. They're not paying 1 month and then they're making double payments. Things along those lines.
Or will it say like, okay, this person is very good and he has even been paid twice the amount that he was supposed to?
No,
No,
it doesn't say that.
only late payments.
Only late payments.
Okay. So now, when it is late more than 30 days, it is not, we are talking 0 to 30 days, we are not talking about that.
No, 0 to 30 is within time. Anything after 30 days is late, and it's rated as R2,
Okay.
which is R1 is paying 0 to 30, which
Okay.
is rating 1. 30 to 60 is considered R2.
Okay.
60 to 90 is considered R3.
Okay. I just remembered someone because we have an investor and we have a tenant and he always pays late. But within the 30 days, but always late. It is a standard that he will pay late.
So as a landlord, while we're on this topic, you're allowed to give the late notice the very second day. So I have a template notice ready.
Awesome.
The rent doesn't come on first. At 5 p.m. when I leave the office, the notice is ready. Next morning when I come in, the rent is not under the door, the notice goes in.
Awesome. This is very awesome. Okay, now let me.
3 notices, and you can take them to landlord tenant board and tell them this person is consistently late. And the landlord and tenant board will issue an order saying you cannot pay late. If you pay late, the landlord has the right to evict you.
Awesome. Now, interesting, but in COVID situation, you can't evict this.
So you cannot evict, you're
Okay,
right.
okay.
What you can do
Hmm.
is you can have a full tally of their account,
What do you mean by full tally of their account?
meaning what have they not paid. And you're allowed to go to landlord tenant board for everything that has not been paid, because landlord so there is no free living per se.
Faisal,
You
let me ask you a different. Let's just suppose if a tenant is not paying. It's a
Mhm,
different out of the start the discussion that we're having.
mhm.
By the time he stopped paying, he's still there for 6 months, and with COVID, he may be on here.
You are right. What you do is go to landlord tenant board, get an order issued, and go to the court and register a judgment,
Okay.
which means
So
the tenant will no longer be able to rent somewhere if that judgment is there. No, landlords don't rent you if you see a judgment.
I
But you
would,
want,
yes, I would prefer to like, I don't know, down the line, something of that should come over. They, before renting it out, they should get a clear, like a, some stamp or something, like, okay, cleared by landlord and tenant board, we can go and rent.
that would be interesting. That would be interesting.
Because see, let's just suppose they have goofed up with the landlord and tenant board. The
Mhm.
next landlord doesn't know that.
True.
Or there should be some kind of a, like a, on registry kind of a thing that any landlord can go and check this particular name, this particular person, and is it good to go? Does he have a green
I think
signal or not?
I think there is a lot of gray area,
Yes.
and both parties can take advantage of each other,
Yep. That
right?
is
So I think that's a very much, I would say, 2025 thought.
okay.
But
I hope someone is listening to us because the main thing is
well, you may want to patent the idea.
perfect. We have patented today. So by this webinar. So if anyone comes up with this thing, we are going to take the benefits of it. Okay, let's go ahead with the next one, Faisal. It says significant debt load. So you are able to comprehend like how much is the debt load there, as we had discussed last.
On the credit report, there's many information. One of them is what is the limit of the debt. So let's say a credit card is $10,000. It will list that the credit card is from TD Bank for $10,000,
Okay,
and what is the balance on it.
okay,
So balance is the debt load.
okay.
If if you see all the credit cards and lines of credit close to the limit,
Mhm.
that's high debt load.
That is right. Okay. So basically, that is how things go on. Okay. Let's see. The next one is it is also important. What, what is it saying? It is also important that you examine your tenant's income and assess their rent to income ratio when considering the loan. Either,
Yes.
what happens if they had a job at the day when they came here and next day they are out? How do you handle that situation?
Sir, this happens sometimes in the mortgage situation too.
Yes.
When they signed the offer papers, everything, they had a job, something happened in between, and now they have the house keys, but they don't have a job.
Yep. You have to make sure you are fully equipped how to handle the situation. Uh, being now, before we go, you have been a landlord for 10, 11 years, you said?
2009, you made me a landlord. Or I should say, yeah, I think it was a lot of input from you as well.
Yes. But how has your experience been?
bittersweet.
Okay.
I've learned a lot from it,
Okay. Okay.
like quite a lot.
Mhm.
Um, Bittersweet. Will I do it again? I think I'll do it again and again and again.
Because you become more like a pro there.
I've become a pro. Like as I said, I have the notice ready. On
Perfect.
the first, the rent doesn't come in by 5 o'clock. When I'm leaving the office, the notice is ready. I actually write it out ready. Next morning, when I open the door, the rent is not here, the notice goes in.
And how many times have you done?
Oh, once I give them, and usually they keep running, like I get a call or something fast within an hour.
So
Okay.
it does its trick.
See, it's, I wouldn't say it's a trick, but this is what I would say. The tenant is living in a rental property.
Mhm.
Tenant has an obligation to pay rent,
Mhm.
and I have an obligation to pay mortgage.
Yes.
Tenant cannot buy that property, is why they're renting.
Mhm.
So how am I, like, how can I, like, I still have to pay the mortgage. Tenant
Yes.
pays me or not.
Yes.
So a day late is a day late.
Oh, makes sense. Okay. Now, next is let's go to the next part of it. We are here. Derogatory remarks. I am always like my it goes like remarks, but it is only marks that they're talking about. Credit card charges, charge-offs, accounts in collection, car repossession, bankruptcies. Faisal, will you get that information on the?
Credit report,
Yes,
all of it, every single one of them.
really. Credit
Yeah.
card charge-offs. What do you
Yes.
mean by credit card charge-offs?
Written offs.
Written-offs. Okay, these are charge-offs or written-offs. Okay.
So charge off is an American term. Same thing in Canada, written off. Basically, credit card, if you look at your credit card, there is an expiry date on it.
Okay.
Okay? The credit card company does not have to renew your credit card on that date.
Okay.
If the credit card, and if your score is low, because the way they renew it
Mhm.
is they check your credit score.
Okay.
And if your credit score is still in the acceptable range of that credit card guidelines, the card is auto renewed.
Okay.
But if your score is quite low, or you have stopped paying one of your other bill, or so on,
They
the
can act
credit
on it.
card,
Okay.
they can discontinue the service.
Okay.
And then it is a charge off, which means that you don't have a credit card, but you have a debt to pay.
Now, what is this write-off or charge-off?
Write off means, or charge off means, there is a balance on the credit card and you don't have an active credit card anymore.
And they will keep on going after you.
Yes, they have the right to
Pursue
take
it.
the
Huh?
money out of your bank account. They have the right to file a judgment. They have a right to garnish your wages, collection, put lien on your home, all sorts of things.
All sorts of things. Okay. What is this? Next one is accounts in collection. You just walked off. Okay. Car repossessions. What does exactly this comes?
So car repossession, and I've seen many of them in 2020 specifically, where some of the clients we deal with have big car loans.
Okay.
Now let's say there is a car payment of $700, and I've
Mm-hmm.
seen as much as $1,200 car payments.
Car payment. Yeah, yeah. Car payment $1,200 is like a regular car.
Yeah,
It's not.
so $1,200 car payment. If you don't have a job,
Mm-hmm.
how are you going to pay?
Yes, you have to be able to pay. Okay.
First month, second month, third month, it's R1 becomes R2 becomes R3. The company is going to come and repossess.
Okay. So that is going to show there.
Yeah.
And bankruptcies. And bankruptcies are also shown in there on the
Yes.
credit report.
Bankruptcies, consumer proposals, any consolidation program.
Okay, they're all showing up.
Yeah.
Okay. Let's head to the next part of the part. Okay, delinquent accounts in rental history. Landlords can generally also use credit checks to help assess an applicant's rental history. If your prospective tenant's previous landlord has reported their payments history to the credit bureau, then this will show up on. Really? The Faisal, like you as a landlord,
Mhm.
can you go and report it on the credit bureau?
So they are trying to put that. So I don't know as to how quickly they are acting on it.
Okay.
But rental payment history is supposed to go on the credit report. Now, if let's say, and I've done this in the past to one tenant
Mm-hmm.
who didn't pay for over 3 months, 4 months almost,
Mm-hmm.
and I did go to landlord tenant board and I got a judgment, uh, um, eviction notice, and I filed that with the court and got a judgment and put that judgment on the tenant's credit bureau.
Okay.
Um, what happens is once that judgment goes on, it
Mm-hmm.
says what that judgment is for.
Okay.
It will say rental payment from this time to that time and so on and so forth, landlord tenant board approved and so on and so forth.
Okay.
So if you see that, that's a delinquent account in rental history.
Okay. So basically, you as a landlord can go and register them. Can
Yes, there is a process to it, but yes, you can.
You can? Okay. And is the process easy?
Um, it is step by step. I wouldn't say it's easy,
But
but
you have to go through the steps.
yeah, and there are professionals,
Who can put that there?
like the paralegal and lawyers and such. They have access to all of it.
Okay, makes sense. Okay, next is let's see how far we are in this particular articles.
Mhm.
How do landlords check credit? Ask a potential renter to give you a copy of their credit report. Pull a credit report yourself. Hold on here. Can the landlord pull out the credit report on their own?
They cannot
I
unless
don't
they
think
have
so.
access
Yes,
to it.
or they have
However,
an authorization.
yeah. So once they have the authorization,
Mm-hmm.
they can like they have to have system to be able to do it because Equifax not everyone has access to.
Mm-hmm.
You being a landlord, like let's say if I was a regular landlord, I would just ask the client to give me the credit report.
Yeah, go and pull it out yourself and just email.
Yeah.
Let me have a check at it. Okay, Faisal, let's see what is the next thing in line here. Screen tenants online with smart move. Wow. Oh, okay. Did you see this one?
Yeah, I'm looking at it now.
Okay, so they have a smart move tenant screening comes in. Okay, is it a paid one or something? When it comes to making leasing decisions, you may find it less than ideal to
Mhm.
rely on a renter provided credit report nor jump through the hoops required for using credit reporting agency.
Yeah.
That's where smart move tenant screening comes in. Wow.
Yeah.
It'll be better that landlords can go and check this out. It will be
Yes.
very interesting how to go through this one.
Yeah.
Oh, very uh, good that they wrote an article with a link to this. Okay. Faisal, I think so. This is where that resident score comes in over. Propriety to smart move. Are you seeing this?
1 second. For some reason, my window went small. Ah.
Okay.
Oh,
Resident
okay. I
score.
see. Resident score.
Propriety to
Proprietary.
smart move. Resident score weighs an applicant rental performance and has been found to predict the likelihood of eviction 15% better than a typical credit report. Oh, okay. So it has some more info than the credit report. Criminal report. Smart Move uses advanced filters and industry best practices to search millions of criminal records. Wow, this is interesting.
Yeah. Eviction report, credit report, income insights.
Oh, interesting. So the last one they made a very very good, interesting reading here. So in a credit report, can you get any idea about the criminal being this person is a criminal?
So if the person has gone to jail,
Mhm.
there is something that I have seen a long time ago.
Okay.
It's uh, and I forget the word. Incarcerated.
Yes, incarcerated. Very much used in U.S. Incarcerated. There also.
That's
There also.
that's
Yes.
the term I
Yes.
have seen on the credit report.
You can you see that incarcerated?
Yeah, it shows on the credit report.
Interesting. Okay. Then credit report, in-depth payment history. Okay. Eviction report. It takes up to 4 weeks to evict a tenant and can cost an average. You can learn it that has been evicted. How can you learn it?
Uh,
Faisal, you better go and have a look at the smart move resident score. So see, not only you, I got you with something extra here.
Smart move. I'm doing a Google search on it later.
Yes. Income insights verify that your applicant is making the income they reported and reduce the likelihood of facing renters. Uh, Faisal, uh, can you get income insights?
I see. I should. So if I'm looking at me as a regular landlord, I would not have income insight.
Okay.
But because of the number of years I've spent in this industry, when I look at a pay stub, I can tell a lot more than just that pay stub.
Okay. So you have got more insight than the income insight.
Yeah, I probably do.
Okay. Awesome.
But I
Okay.
think it's this smart move is a good one to
I
check
mean,
it out.
I'm really, if they are doing this, that means even if it is 15% better or not better, you are still getting some of the more insights than you are getting from a credit report.
Exactly.
You are getting some three, four. I mean, will I don't think so. A credit report will show an eviction report.
No, a credit report does not show an eviction report unless there was an eviction, the tenant did not pay, and the landlord went to the court and filed it with a judgment.
I'm just curious to know how will they come to know the income insights?
There is industry insights. So, for example,
Oh,
and this is
interesting.
just one
Okay, okay,
example,
makes sense. Makes sense.
right? Like, let's say if you're renting it to a server,
Mhm.
what is the insight? What a server of a salary of 50,000 working at, some high-end restaurant, what is the average tip?
Makes sense. So you get industry insights.
Yeah, I think there must be some sort of a database that they have
That they can,
collected
yes. So,
over time that they're using for the insights.
okay, making sense. Okay, let's go back to the article again. Okay, now, what if my prospective tenant does not have any credit?
Big red flag.
It's a red flag. Okay.
Big red flag.
In the absence of credit history, you might also consider requiring a larger security deposit or advanced payment of rent. But
Absolutely.
But the main thing here is, as per the landlord tenant board, you cannot have larger security deposit. No?
See, landlord tenant board has guidelines.
Okay.
At the end of the day, it's the comfort of the landlord and the tenant.
Oh, okay. So those are basically guidelines. They cannot come in.
There are guidelines, and there are some things that the landlord tenant board doesn't allow you to do.
And what are
But
those?
but if
Just a few tips.
I don't like, for example, asking for a large deposit is one thing, but there are certain other things that the landlord tenant board doesn't allow.
Okay.
And I don't have it right off the top of my head,
Okay.
but some things are considered not okay.
Next one is co-signers are legally required to pay the rent. Wow. Is that true? Right?
Absolutely. If the tenant does not pay, the co-signer is left to pay, and they have to pay the full amount, not half.
Interesting. Interesting. So they feel like I was the only co-signer. There are four co-signers. Mine, my share is 25%.
No, 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 no. Full. There are four co-signers. Every single one is liable to pay 100%.
Awesome. This is awesome. Good to know. Good to know. You learn a few things every day. Okay. Now, final notes. Here is a summary why smart move is better than solely relying on a credit check. Thorough background check, FCRA compliant. What is FCRA? Local and federal laws. Huh?
Have no idea.
Quick and easy, online convenience, no subscription, you pay or not pay. You can choose to pay the screening fee or pass the cost to the renter. Oh, so there is a bit of a fee there.
Yeah.
Leasing recommendation. They will recommend you to accept or decline an applicant. Awesome. Soft credit pull. They also pull the credit. Oh, okay. So they do charge you, and that brings us to the very interesting article, Faisal, by Transunion.
Yeah.
What do you have to say? Conclude, and then we can take it to the next one.
I have to say, when it comes down to Equifax and TransUnion,
Mm-hmm.
TransUnion is a lot more creative.
Oh, interesting. Okay.
In terms of technology, in terms of certain things. I like to look at a TransUnion credit report
Okay.
um, because it has more to it.
Okay.
Equifax is plain and simple.
Mm-hmm.
Uh, it has what's needed, but TransUnion has what's needed and more.
Okay. Interesting. Okay, Faisal, this brings us to the end of the topic. We covered it within an hour, and we were in the glitch for 5-10 minutes there. And now let me head over to the main webinar topic: rent to own homes. Is it a risk for tenant or buyers? I hope some of the people are there for this one, and we now take it over from. Uh, Let me get into the details of this one. So, ladies and gentlemen, we are now moving on to our webinar topic. Rent to own homes, is it a risk for tenants or buyers? And let's head over to it. Do you want to add anything to our last session, or we are good to go further?
No, we're good to go.
Okay, let's keep rolling on this one. And the first thing I'm going to do is, okay, ladies and gentlemen, we are now into our webinar topic after an hour or so. And the main thing is, rent to own homes, is it a risk for tenants? It is a big and a very big risk. Whenever we're trying to do rent to own, we are basically trying to address a worst case scenario. So even before you begin what is rent to own homes and things like that, I'm trying to walk you through. We are trying to address the worst case scenario. It is a very, very costly program. And uh, it is not an easy cup of tea. So you have to be aware of those particular things. And with that, I will take you into the first thing. So the first risk is income risk. And let me see if I have not missed out on any of the slides. And let me see if I can go back to the previous slide and to the previous slide. Okay, so yeah, I am on the right slide, and I'm going to go to the next slide. And the first one is the income risk. Okay, let's go ahead and answer you that particular one. Okay, now when we are on the topic of the income, let me first guide you where exactly does the income qualification stands for. So whenever we are talking about the income qualifications, we're always talking about the annual gross income. Okay. And second thing is there is no income speculation. Like let's say suppose you're doing the rent to own today, and in 3 years' time, during the term of my contract, my income is going to be this much. No, we are not taking that income speculation in there. We are trying to address it whatever is the income right now. So that has to be understood very, very clearly. And we are always talking about income as a gross annual income. So now, okay, Faisal, you are back, it seems like. Okay, let's go through.
Yes.
We are trying to do, whenever, this is how we do the calculation for the income. It is 4 times the income for a condo. So if your income is $100,000, you will qualify for a property up to $400,000. And for a freehold property, this can go all the way up to 4.5 times the income. So your income was 100,000. Now you're looking for a freehold bungalow. You can go all the way up to 4.5 times. That means all the way up to $450,000. And these numbers can increase slightly depending upon if your credit score is very good and the debt is slightly very, very low. Faisal, do you want to add anything to that particular?
No, you're absolutely right. Condo is 4 times, freehold up to 4.5 if income is there and debt load is low.
Okay. And you have seen slightly going high.
Yes.
Faisal, let me ask you this. I mean, has anything changed with the interest rates being low in the income qualification that we are just discussing?
If you're going 20%, it can even go up to 6 now. If you're
Really?
going 20%, yes.
Really? Okay,
Yeah.
so let's say suppose someone's income is $100,000. Okay,
Times it by 6. 20% down.
so you go 6 times, so 600 and less 120 because that's the 20%.
Yes.
How is that possible? Give
There is
me.
a lender that has that program.
Well,
Mhm.
that is interesting. And now, let's say, suppose apart from the sales, they also had a portion which they could rent it out. Does it go any higher?
Not in that program.
Okay. Is there some other program where you can go with less than 20% then?
Less than 20% down and you want rental income to offset.
There,
Is that
there's,
your
there is a
question?
portion of the house which you can rent it out. So, can this 4 or 4.5 times go slightly higher? Because the market is completely different.
There is a possibility. We would actually have to see a live client to make that work.
Okay. But there are possibilities.
There are possibility because your portion of the home, as long as it is self-contained, can be used towards the mortgage payment offset.
Again, go slowly. This part is.
So
What
you
did
know
you?
how a mortgage payment, let's say, is $2,000.
Okay.
Your basement is self-contained,
Okay.
meaning has kitchen, bathroom, bedroom, living room,
Okay.
whatever,
Okay.
has separate entrance. The
Legal
base,
or no legal? Huh?
legal or no legal,
Oh, interesting.
basement basement income can be used to offset the mortgage payment.
Okay. So let's say, suppose, for argument's sake, you're making $1,000.
So now you can qualify for more.
We can. I mean, that is
Yeah.
interesting to know. Very interesting to know because, ladies and gentlemen, this is a game changer if you can come up with something because the market is very different. And that is why it is very, very pertinent to know that these numbers can change. Okay, let's go
Yes.
to the next one. Okay, I hope I have not missed it out. Another one. Let's go to the next one. Okay, the next one is a big no to income speculation. That's what I have just told you. So we are discussing is rent to own homes a risk for buyer tenant. The first is we are not going to do any income speculation. That means, like, let's just suppose, for argument's sake, you're buying a property today for 500, and in 5 years' time it becomes 630. You have should be qualified on the basis of 630 from day one, not on the basis that you will reach there and then, because now on 630 you will not qualify. Are you with me, Faisal, or not?
Yes.
So, on the basis of whatever is the option price, that is how you have to get qualified, not on the basis of 500, because that is a big risk that you are taking yourself. The moment 5 years in this country will fly like crazy
Yeah.
fast, and your income is not there because the difference between, see, for a 500, you may get away with 125. Now
Hmm.
you require 150 or 160, and you may not reach there.
Absolutely.
And that is the one of the biggest risk that you would be taking. So you have to be qualified on the basis of option price, not on the basis of purchase price. Second thing is, which has to be understood by the tenant or buyer clearly from day one. What happens if there is a loss of income? It is you have to know if your income goes south, what exactly happens there. So these are one of the biggest risks that are there. The third pointer here is the income qualification should not be calculated on the basis of the property purchase price. That's what I just walked you through. The income qualification should be calculated on the basis of the property option price at the time of entering into the contract. So this has to be a clear format before you enter into it. What do you have to say on that, Faisal?
Yes. Income speculation does not work. Absolutely not. And yeah, down payment, of course, has to be there.
Okay. Now let me get to the next one. Okay. Next one is, let's get over to the next one and let's see what I can get you on this one. The next one that has to be understood here is down payment risks. Okay, it ran so fast from me. Okay, let's see what exactly is the down payment risk. Okay, let's see, Faisal, if I can get this one. Okay, let's say suppose you're trying to buy a property for $500,000 and your initial down payment is 5%, which is around $25,000. Freehold and detached properties, and your mortgage amount may be 2,300, your utilities may be around 300. The property taxes, which are being paid by the landlord and seller or landlord, and your home insurance may be around 100. So the total amount comes to around $2,700 per month. Are you there with
Mhm.
me, President?
Yeah, I am.
Now, plus you add another $300 as an extra down payment, so your amount comes to around $3,000. Now, if you're looking for a condo in a condo townhouse, this may be slightly different because there may be an additional $300 for the maintenance amount. So your total amount may come to around 3,300. So for a you may get away with 3,000 for a for a condo townhouse. You may be wanting 3,300. Now,
Mhm.
this is the risk that you will enter into. So let's explain you that particular part. Down payment risk. You may lose this down payment, Faisal, if you are at a loss of an income. That has to be clearly understood. So you will lose the initial down payment. So the initial down payment was $25,000. You will lose that plus the $300 per month if you're paying for a certain period of amount of time. So
Yes.
that has to be understood by the tenant buyer that if there is a loss of income. Down payment risk due to credit not repaid in time. Okay, now this has to be clearly understood that the reason that you are in a rent to own program is because you are trying to fix your credit. And if you don't listen to the mortgage expert there, if you don't listen to Faisal, the credit repair is not done on time. Faisal, why don't I have an input from you? Do clients listen, or what do they come up with stories? What do they come up with stories?
Stories. Um, you know, there are different types of clients, of course.
Mhm.
Um, but someone who has gone through difficult credit, um, like difficult time in their past where the credit has damaged,
Okay,
they seem to listen
okay,
because their goal is to get better credit
okay.
and they can see the results on a monthly basis.
Mhm.
So they do listen, number one. Number two, um, someone who has done some work and they have seen some improvement,
Mhm.
those are the ones that don't listen.
Okay,
And you cannot help everyone. So um, if they and that's in my contract that you have to follow what we say.
okay.
um, it's nothing crazy that we ask for,
Mhm.
but if we ask you to make the payment on a certain date, you have to make that payment.
Okay. And what is your trend that most of the time do they listen to you?
If they don't listen, then I everything is in writing and it's all on email.
Okay,
So if they don't get the result that they're looking for and they have not listened and follow, then it's client's fault.
okay, makes sense. Okay, let's head over to
Usually clients, if they don't listen first month, they start listening the second month because they're not seeing the results.
yeah. Or they're keeping their down payment under risk, major risk.
Yes.
Okay, let's head over now. Let's just suppose what happens here. So, what are you putting yourself at risk here is $25,000 of your down payment.
Yes.
The complete initial down payment will be lost if you don't complete the lease option to purchase contract. So you have to understand what you're doing here.
Yeah.
Second thing is you are paying per month amount of $300.
Yes.
So another, like in 3 years' time, every year you're losing around $3,600.
Yes.
In 3 years or 5 years, you've almost lost more than $11,000 to close to $16,000, $17,000, which is a
Absolutely.
huge amount. So if you don't close the property in 5 years' time, you have lost 25 here and another 16, 17 there, which is like $40,000, $50,000. And Faisal, let me walk you through the interesting part of it. That property which you had purchased for 500,
Hmm.
now that same property after 5 years or 6 years or 7 years down the line, if you have to go and buy it,
Hmm.
that may be 750. So not apart from losing that 50K here, you will be losing another 100 or $200,000 on the value of the property if you don't close the property. Are you there with me?
Yes.
It is a huge, huge number. Go ahead, Faisal, if you want to add anything to it, because
Well, numbers add up, right?
they
You've added up all the numbers, and looking at that, you really should not have take the down payment risk or the income speculation risk.
absolutely. Because these are serious. You should not be getting into this contract until and unless you are serious in going about.
Yeah.
You can be in quite a big soup there.
Yeah.
Okay, let's go to the next one here. Okay, credit repair risks, and it went so fast. I don't know why this particular slide just goes out on me like crazy. Credit score analysis,
Mhm.
which we have done it in our full article there, and we are going to now anything above 600 and above. You should not be going into a rent-to-own program and just go and try to get a mortgage at rest. What do you have to say on that?
Not everyone can, because down payment and such is a challenge.
Hmm.
Sometimes debt load is a challenge, but that's a good place to start.
Okay.
It's definitely a good place to start. If your credit score is there, it's a good place to, like, at least get talk to someone.
Okay.
And we get a lot of those inquiries,
Hmm.
and then we sort of work through to see where the gaps are and how we can fill the gap so the
Okay.
client can pick up their house keys.
House keys. Okay. Let's go to the next part. Okay. Let's. So credit score above 601, best to get mortgage at rest. Use your down payment accumulation and assistance if required. We can help you with that completely. We have done that numerous number of times. Is that right, Faisal? You can get a mortgage above 600?
Yes.
Okay. And
601 and above. Yes.
601 and above. 501 to 600. It is better to get your credit repair address because it will be very, very fast. And you
Yes.
don't have to get into a minimum 1 year rent to own program and things like that, which is a costly program. And you can use your down payment accumulation and assistance if required. So between 501 and 600, we would still suggest you go for a credit repair instead of a credit of a rent to own. Now,
And
go ahead.
this 501 to 600 can happen as little as 90 days.
Wow. By the time you will have a discussion, we may be over
Well,
it.
life is busy, right? Like, with
Yes.
everything that's going around, um, it's by the time you are preparing your documents, getting your taxes filed, so on and so forth, your credit is repaired.
Yes, that is true, Faisal. And now let me take over to the next slide. Okay, below 500, that is when we are giving you, that is when you would try to choose the best. This is where you are in the rent to own program. So you have to
Yeah.
understand the credit score analysis. Minimum 5 to 7% down payment will be required. So let me explain you here. There are three components to buying,
Mhm.
and the income component does not change. The down payment component does not change between buying and rent to own. The only component which is different is the credit score. So you're basically trying to fix your credit in order to procure a mortgage, and the time it takes you to repair that credit, that is what you're trying to do for the rent to own program. So rent to own program is basically uh, trying to address that worst case scenario, and for those people whose credit is messed up, and it will, like in a past bankruptcy consumer proposal, and it will take you certain period of time, and you are tired of renting it out, you would like to have some stability for your life, that is when you would like to go ahead with. Do you want to add anything to it, Fazil?
Sorry, you've added so much. That's information overload right there.
I can understand. Yes, probably I did not change the slide, so they didn't get a close look at it. So let me again walk them through. So below 500, that is the when we are wanting you to be in part of this particular program there. Okay, let's head over to the next slide there. Best for rent to own homes program. That is what we are trying to explain it to you here. If the credit score is below 500, then go for it. Anything above 501 to 600, try to go for a credit repair. That's what you're saying, best for credit repair. And anything above 601, go for mortgages right away. We have expert there, and he should be able to guide you. Okay, let's go ahead with the next one. What does it say? Credit repair risk. I think this is important, and you will have to.
I'm curious to know what's in this slide.
Credit does not get repaired in time. What do you have to say? You tried, they tried, still nothing is happening. Is that a possibility?
That is only a possibility if the client does not disclose everything
Okay, makes sense.
upfront.
Makes sense. Okay.
Because we've had one client of, things were not disclosed.
Okay.
I'm finding out every month when there is an update, there's new thing pops up on the credit report, new thing pops up on the credit report under collection.
Faisal, what do you mean by new things pop up? I mean, like once you check it out, they should be there. Is it new things he's doing?
Yes.
Interesting.
So let's just say, for example, in January, I checked the credit report.
Okay.
There is 2 collections. I deal with them. In February, I checked the credit report. There is a new one that in January, he took the loan out, and in February, he didn't pay. So it's in collection now.
Yes. So if you are in a format where you don't want to fix up your own stuff, no one can help you there. Is that right?
Yes.
And then don't get into a rent to own program because you will be in a complete mess.
You will be in a bigger mess than you started.
Than you started. Faisal, next part is co-signer accreditations.
Mm-hmm.
The co-signer is not that much under obligation, but he starts messing things up when he doesn't listen.
Yeah.
So you have to be very sure who your co-signer is. If you're bringing a co-signer on the table, you have to make sure that the co-signer listens to you, listens to the mortgage broker, and listens and works with you on this particular one. Otherwise, you will have a tremendous difficulty.
Yeah.
Now, we have just picked it up, this one. The complete funds will be lost if you don't improve your credit score above 600 at the time of completion of the contract. So you have to make sure that you have to cross the 600 mark line.
Minimum 600.
That is what I've said.
When you no, what I mean is, when we start, I may be asking you to have a different number. So, because sometimes you need more than 600 to qualify
Absolutely.
for a mortgage.
So we should change this number to a 650 number or minimum.
No, I think 600 is good, but I'm stressing that minimum 600. It cannot be, yeah.
It cannot be less than that.
Yes.
It cannot be, because you won't get a mortgage otherwise.
Yes.
Okay. Now, if the credit score, this is what I'm going to give it to you, everything. If by chance you are able to improve your credit score above 680, you will even get a better rate. You may even get cash back.
Yeah.
Best rates and cash back will be lost if you don't improve credit score above 680 at the time of the completion of the contract. So you should aim for 700, and even if you reach 680 and above, you are in a good standing. Make sense?
Absolutely. Yeah.
Let's go to the fast slide, which comes fast before it goes on. Property value risks. Wow, it stayed. Oh no, it went up. Okay, property value risks 5. Interesting here. Let's see. Very doubtful if the value fails. Yeah. Though this market does not look like it, but you have to still figure it out. Faisal, this is very, very crucial.
Well, this did happen at
Yes,
some
it
point in
happened at
it
some
has
time in our
happened.
careers. Yes, it has happened in our careers.
So the risk is there for sure.
Yes, the property value risk is there. What if the value falls? Because the bank is not going to give you the money. So that has to be understood. What happens if the property requires additional maintenance funds? So you have to have two kinds of things in the property values there. If it requires work, because there will be an appraisal done by the banks, and if the property requires extra amount of maintenance, the bank may not go all that far. And second thing is, if the property value falls. Am I making sense in these slides, guys?
Yeah.
Because if the property requires an X amount of fixing up,
Hmm.
then the appraisal may not come through that far.
Absolutely.
So you have to go through those two risks there.
Yes.
Okay, so now let's say suppose if the property value is 630,
Hmm.
you will need additional funds if the property values goes less than the option price at the time of completion. So let's say suppose at the time the property values have fallen down and now
Hmm.
the value is 600 and you
Hmm.
have to purchase it at 630. You will have to come up with the extra $30,000 to close the property.
Absolutely.
So even if the contract, we are not, and at this particular stage, Faisal, we are not talking about the loopholes in the contract. We are talking about regular risks, basic minimum risk when even the contract is a completely working property.
Yeah.
Okay, now the next one is what happens if the property value is now at 700 and you had to extend. Hold on here, Faisal, are you there with me? In
Yeah.
5 years' time, you're not able to close the property and you seek an extension. You said,
It
I requires another 2 years to close the property and you get an extension for 700 because every year there will be an appreciation added to the property.
absolutely.
Now you will need an extra additional income to qualify and close the property.
Additional income to qualify, you may require additional down payment because the seller may ask for
Yeah, that is a possibility. He may want to change the contract at that particular stage.
okay. At
He,
the time of extension, it is up to mutually agreed terms.
yeah, anything can change.
Because it's a basically a revision of contract.
Absolutely.
So I strongly suggest our listeners to stay away from thinking of extension. I strongly suggest them to stick to the original contract because anything outside the original contract, you're taking a huge risk
Be very wary of all the risks that are there.
involved.
Otherwise, yes, before you even begin with this particular whole program. Okay, Faisal, let's go to ahead with the next one. Okay, next one is your situation changes risks. That is extremely important too, that your situation has changed. Now, let's see what are the changes in your situation. First is remember, 5 years is a very, very long period of time, and there may be a situation that you may relocate. So, and you may not be wanting to do the contract complete. What happens? So you have to put those things in the contract there according. Second is, Faisal, I'm back to your favorite one, divorce. What happens is you add a cosigner, the cosigner runs away, or you add a partner, he or she runs away. So you have to be very much sure. And now, this is also important, Faisal, if I'm making any sense to you here. In 5 years, your situation changes. That particular house which you were living now no more suits you. You want to upgrade. So the better would be close the property and then go for an upgrade. rather. So, but be aware of what you are starting with, and in 5 years' time, what is exactly going to happen.
See, and you have an absolute point, because we have seen many clients that start with condo today, and then in a year or two that doesn't fit.
No, it does, and the situation has changed now because of this price situation. They are having more down payment than than their incomes.
Yes.
So things change like drastically.
Yes.
So the bottom line is that has to be understood very, very sure. You need to understand the program completely and make sure that the contract is watertight. So, Faisal, you can note down this particular word that we like today.
Term.
That
Yeah.
the wow, what a music, Faisal. Did you like the music?
I didn't hear the music. No.
Okay, let me play it over. Okay, I'll surely play that one. And that is one of the reasons, guys, ladies and gentlemen, which brings us to the end of this particular rent to own. The risk, is it a risk for buyer tenant? It is a very, very big risk. And you have to make sure that uh, the bottom line is that the contract is watertight and you are absolutely aware of what you are getting into before you start acting into it. And that is how we take you to the next level. And that is why we call it as a smart rent to own home program.
Yeah.
Now, that brings us to the end of this particular one. And Faisal, do you have to add anything to it?
No. I'm. That's a lot of information.
That was very, very, yes, it was quite a lot of information there. Let me, now, ladies and gentlemen, before I go ahead with anything else, let me take you back to, give me one moment here, Faisal. Let me get the slides in there. If you, in the meantime, would like to add something, I will keep on uh, adding there, and then I can have the picture there that we can all discuss, and then we can take it from there. Go ahead, Faisal, if you want to add any last words to it, and then I will take them to the conclusion on this question.
The topics we covered today are very critical topics. Um, I would suggest our listeners to, and has a lot of information. I would suggest our listeners to maybe go back and replay, because while we're live, they may be doing, distracted or something else. Play back, and there's lots of golden nuggets that will help you. If you're a landlord, there's tons of information there. If you are a rent to own client, there's lots of information to gather, and there's more. Uh, um, Connect with us, and you'll get a lot more information to make sure that you're taking the right step.
Awesome. Faisal, the only thing I wanted to add was we managed to, without major glitches, remain for 2 hours on the webinar. Okay, let me go ahead and to the ladies and gentlemen give you some of the important info here. Faisal Garcia can be is a mortgage specialist and a mortgage agent with Dominion Lending, and this is one of his websites, guys. And you can go and be in touch with him at faisalgarcia.com. And he is doing excellent works as a mortgage agent. So that is his website. Feel free to be in touch with there. And second thing is he is an expert in credit repair, and he that is his website now on the screen there. You can go there, creditrepairnow.ca, and it is becoming interesting every day. You're adding a few things, so now you have a Facebook Messenger app there. Is that right?
Yes. Yeah.
Wonderful. And how are you doing with credit repair, Professor? Please.
Um, when you say how am I doing, let me help me understand.
Credit repair, because you are an expert here now. And last time you told us, and this is where people get some ideas about your credit repair capabilities. That in your the people that you have been repairing now, in
Mhm.
how short a period of time, and from what score to what score did you take?
So um, one of the client was 3 weeks, which is the fastest. The recent one I have, um, I even forget. Um, the recent one I had was also quite a bit of jump. Today I was talking to a client in 30 days, 50 points.
Awesome, awesome, awesome. So what was the score earlier, and what is the score now?
It was 575, no, 557, and it was 607.
Okay, 6 or 7. So, how far are you wanting to take them?
My goal for them is 630 minimum.
And how fast you will be? So, that is within 30 days, you have brought them 50
within
points.
within 30 days, and I expect that to happen in another 45 days.
15 more, or 45 more?
45 more.
For the From 6 or 7 to another 6:30.
630, yes.
Why would that take that long?
They don't have too much credit.
Okay, so they have to establish something.
Yeah, they will. It will take time for them. It's just a type of client.
Okay, okay. So, but otherwise, it could have been fast.
Yes, if they had few credit cards, it would be faster, but they
Okay,
don't have anything.
okay. Let me take over to two of my websites, which, ladies and gentlemen, will find it amazingly interesting. One is called MA in Real Estate, that is Manoj Atri in Real Estate, that is what is the short form for that. Master of, and also Master of all Real Estate in Greater Toronto area. That is what I've given it. And those links are there in the description, where I curate 8 to 10 articles on a regular daily basis and email it to clients, which covers what exactly is going on in the market these days. Faisal, have you been going through these particular articles, or do you get them regularly or not?
I do get them regularly. Um, Sometimes I scan through them. That is part of one of the things that I do in the afternoon.
Okay,
But see, anything that is related to credit repair catches my attention. Anything related to landlord catches my attention. And I like that you have 6, 7, 8 articles. So not everything interests me, but what interests me is there. Just like that, all the other viewers that do get that, there must be something else that interests them. So it's very good format that it's got 6, 7 items to choose from.
okay. So you do find it interesting,
Yes,
and you get it regularly,
I do get it regularly.
and it
Yes.
doesn't go to your junk mail or something.
No, not to my junk.
Okay, awesome, awesome. Okay, so that is what was some of those things I was wanting to have an idea. If you
Mhm.
get them, and this is like, it takes me quite a while to put these 8, 10 articles together to curate, but I have made it as a habit,
Mhm.
and I put them together because, see, this is where I get in touch with them. I
Mhm.
walk them through what is exactly going on in the market, and most of the time I go through a lengthy reading on those ones. So it
Mhm.
takes me a lot of time because I have to go through them also, some of them, and some of them are very interesting. So I even have to read them out completely. So those are some of the ones
Mhm.
that are there. Now, the
Yeah.
next one I was wanting to share is my website, which is manojatri.com. And this is the webinar page, guys. You have coming over. You can come register here for the next webinars. And also, we cover lots of other stuff on the website. And these are like, you can come here, you may have registered here for the webinar, and this is where we go through the entire thing. Now, these are some of the other things that you can go through. free online home search. Click on this one, and you will be taken to a website where you can search like real estate agents. Then we buy houses. We have a list of investors with us who are willing to give you cash money, and but the market is very hot, so this is not that relevant these days. But as and when the market changes, and this may come in handy too. Power of sale listings, there are not very many power of sale listings these days because of the market. But if you would still like to, on the higher end also, if you would like to see any power of sale listings, I, as a real estate agent, have an access to all of them. If you can sign up here, email it to me. I will be more than happy to send those listings for you. Zero down with cashback program. The banks have a program. Faisal, do you want to elaborate anything on the zero down cashback that you're coming across?
Um, so banks have removed the word zero down, but there is a way to have zero down.
Faisal, I was reading one of the banks has almost come up with 5% cash.
Yes, there is 5% cashback.
That is what I was. I wanted to double check with you. That was the specific reason I brought you on. I have heard that they are coming up with 5% cash.
5% cashback. Yeah, that exists.
That exists, yes. So that is what I was wanting to share. Guys, when we say zero down or a cashback program, it is not that we're just telling you like that. There are people who can get away with low down or cashback. The only dilemma here is that initially you will have to have those funds. Once you close the property, you get the cashback and you can pay them off. Is that right? Faisal,
Yes.
is that a possibility?
Yes.
So there are it's the banks have a cashback program.
Yes.
Awesome. And you can get more details from the mortgage brokers and things like that. So it is not that we are. And then the rent to own program, stop renting, buy with lease option. And remember, it is the worst case scenario and it is the most costly program. But still, if you're stuck up in a format like that, we are more than happy to work with you and walk you through. Then this is the one which is the webinar information. Every alternate working day, working Monday, we do these webinars from 7 p.m. and we are almost touching 9 p.m. Wow. How much is my house worth instantly? I will be more than happy to put that whole report together for you. And I do it very fast and get you the information and insight on the house worth. And you may be able to take advantage of the roaring market. So this is where we conclude. And let me take a conclusion from the mortgage expert, and then we will call it a day. Faisal, go ahead, sir. Faisal.
Thank you very much, sir, for bringing me over here. And thank you to the audience that are here and will be listening, because this webinar will be posted on YouTube, and I'm assuming it also stays posted on Facebook and Twitter, right?
We are live, and they do tend to remain. I hope they remain. I don't think so. They remain on Twitter. They go away on as the time passes. But I mean, on YouTube they will be there, and on Facebook they may be able to search for it. But the main thing here is, Faisal, I was skeptical after 8 o'clock when you got up for a few moments. I said, wow, I'm left alone now. So I'm very glad and very happy
I
that
never
you
leave without saying a goodbye.
No, it is good that you were there, because see, these are some of the minor things, and you're an expert in mortgages, so it helps to put the whole perspective into play. Again, ladies and gentlemen, thank you for your time. We are exactly 2 hours into it, and let's call it a night. Thank you again, Faisal, for your 2 hours here. Really appreciate it, and I hope to see you in 2 weeks' time again with a new topic and new webinar there. Wonderful.
Thank you
Thank you
again.
again, Faisal.
Thank